Hello guys, welcome back to RALLYTOP Investing. If you are SMC trader and you find yourself struggling with becoming consistently or staying consistently profitable in the market, you always find yourself on the wrong side of the market, you need to watch this video to the very end. This video is going to be a short one, but it contains a lot of valuable tips that can help you to become a better trader. If you haven't mastered the concept of inducement, like the back of your palm, I will advise you strongly to go back to our playlist. We released a video, either one or two videos concerning inducement. All right, and we were very explicit in those videos. Go watch those ones first before you come to this one. The very reason why you are failing as SMC trader is simply because you do not know how to identify the right inducement in the market. Agreed that a lot of mentors have taught that inducement is the first internal structure pullback, whether in the case of a bullish or bearish structure. And that is completely fine. No arguments about that. But the question to ask is, what actually constitutes a valid inducement? Look, let me tell you, your inducement plays a vital role in determining your swing highs and swing lows in the market. So if you mark the wrong inducement points, you will always find yourself on the wrong side of the market. And that's why you need to pay attention in this video. I'm going to take you to this diagram and explain what I mean to you. Now, after this diagram, we go back to the live chat and I show you one or two examples. All right? Now, take a look at these two diagrams. This is an uptrend and this is a downtrend. Okay? Now, in an uptrend, your high cannot be confirmed until inducement is taken out. Remember, I told you your inducement determines your high, your swing highs, and your swing lows. So your high in a bullish structure cannot be confirmed as a valid high until inducement is taken. And here is the inducement. As you can see, it was taken out. So high is confirmed. Now, your low cannot be confirmed in the case of a bullish structure until price sponsors the move back up to take out this major structure high and close above it. And as you can see, that happened here. That's why this low is confirmed. And we have a higher high. Remember, your high cannot be confirmed until inducement is taken. And as you can see, inducement is taken. And so on and so forth. Now, where I want you to pay attention is this area. This area, guys. Let your eyes come to this area. I want your attention here. Please, pay attention to this point. I earlier said to you that actually inducement is the first internal structure pullback, whether in the case of a bearish structure or a bullish structure. But the question to ask, how was that inducement taken? Was it by a candle wick or by candle closure? Very important. Because your inducement will determine where your highs and lows are. This is why a lot of SMC traders are failing in the market. Now, they can identify their inducement level, but they don't know what constitutes a valid inducement. Now, take a look at this. This candle took out this inducement with a candle wick, not with a candle closure. And because they have told you that once inducement is taken out, your high is confirmed. So that's why we confirm this high, isn't it? And then we said the higher low cannot be confirmed just yet until price sponsors the move back up to take out major structure high and close above it. And this happened here, isn't it? And here is confirmed. Okay, that's great. Now, as a trader, In this instance, what do? You are waiting for price to come back. This is your low, this is your high. So meaning that this is your trading range, this low and this high. And therefore, you want to look for your area of interest or your point of interest around. And here is your OB. All right? And therefore, as a retail trader who does not have this kind of knowledge, you will mark your OB here. This is your OB. All right? So you are waiting for price to come and take you into the market, to tap into that OB, to go long. And then you frame your trade, which is completely fine. Nothing wrong about that. You frame your trade here. Here. Where is your stop loss? Your stop loss just below. Because according to you, you can give a buffer to your stop loss and target this high. Where? Which high? This high. This one first. This is the high you target. Okay? Which is okay. Which is all right. So you are waiting for price to come and tap you into the market and you go long. All right? Correct. And which is fine. And then you find something like this. Now, price will do something like this. Please watch me. Price will come down. Touch on this your OB and continue going down, going down, going down. And boom, it breaks your point of interest and taps on the extreme OB and start going higher. What happened? Someone watching over your shoulders? What actually happened here? And that is why I want you to pay attention here. Let me tell you what happened here. Let me take this one out. Let me just delete this to have it cleaner. Let me tell you what happened here. Now, price took out inducement with a candle wick. Anytime price takes out your inducement with a candle wick, know that you have 80 to 90% chance that when price takes out this major, what you call major structure high, and comes back, it will use this candle wick that took out this inducement, this previous inducement here. It will use it as a fresh inducement. It will take it out of the market. All right? Because this is actually not a valid swing low. And this is not a valid swing high. Why? Because it took out this inducement with a candle wick. Simple. Is that surprising to you? Well, you may regard this as a new idea or new trading idea. But please, take it from me. 80 to 90% of the time, it will happen. Okay? So what do you do in this scenario? What you do is that you transfer the high of this high, you transfer it to this next high. Your low should be out of the place. Your inducement should also be transferred. Everything here should be transferred. They are not valid. Why? Because of this candle wick here. Because in future, as price is coming down, it will use this candle wick as a fresh inducement to take it out. Now, a lot of traders will believe that once price takes it out, it means, and closes below it, that means we have change of character. That's chalk. And they will start looking for opportunity to go short. And before they know it, price will go higher and break this major structure high and continue going higher. The reason is simply because you didn't understand that when price takes out inducement with a candle wick, that candle wick will become a fresh inducement in future, 80 to 90% of the time. Okay? Does it mean that it happens always? No. But we are stacking the odds in our favor here, guys. We are trading probability. Simple. So we want to trade the most probable scenario in the market. Simple. And we know that anytime price takes out inducement with a candle wick such as this, eventually price will come and use this candle wick as fresh inducement in the market. Most of the time, this inducement here, this candle wick, will become a fresh inducement, and it will be a major inducement if you go one step on your time frame, one step above on your higher time frame, on your time frame. For instance, this is 15 minutes. If you go to the 1H, this can be your major inducement. Despite the fact that there is an inducement here, it doesn't really matter. Your major inducement, if you go one step higher on your time frame, you'll discover that this is a major inducement, your higher time frame inducement. Okay? On your higher time frame, this may not even be any inducement. There may not be any inducement here. Simple. Okay? So that is why traders are getting it all wrong. And they are beating themselves up. Why am I failing in the market? It is because of this simple reason. The same thing in a bearish structure. Just the same thing. All you need is to flip it. This is your low. Why? It took out inducement. This is your lower high. Why? It sponsored the move down to take out this major structure low. This is your low because it took out inducement. But again, let your eyes be here. How did it take out that inducement? Is it with a candle wick or with candle closure? It took it out with a candle wick. Eventually, price will come and take it out. But because you don't have this knowledge, you'll find out that it has taken it out with a candle wick. So this is your high. And it has sponsored the move down to come and take out this low. And this is your low. So you said this is your trading range. This is your range high, range low. And therefore you want to wait. After inducement, you want to enter the market. And here you have your point of interest. According to the retail trader, that's your point of interest. Okay? So you are waiting for price to come and tap into this and take you lower. And therefore you place your stop loss, your sell order here. This will be your sell order because you want to enter short from here. Okay? Perhaps you put your stop loss above and then you target this low. Simple. Simple. And which is completely fine. All right? But look at what price will do. Because the smart money understands price will come up and tap into your point of interest and then go ahead and break it, boom, and tap into the extreme OB and start coming down. What happened? The same explanation I gave here. That's what happened here. This high and this low, this high should be transferred and this low should be transferred. This low should be transferred to this point. All right? Just like in this case, this high should be transferred here. So that high is no more valid there. All right? Your break of structure is no more valid there. Your low is no more valid there. Okay? Your low is no more valid there. Your inducement is also transferred. It's no more valid there. Simple. Simple. So this is your new inducement now. This inducement here is your new inducement in the market. This one. Despite the fact that you have an inducement here, it doesn't really matter. When price comes, price will use this as a fresh inducement to take it out and tap on this like I explained to you. All right? The same thing here. This high will be is no more valid here. Take it out. This low will be transferred to this point. All right? Your break of structure will be transferred. Everything will be transferred, guys. Simple. Simple. Everything will be transferred. And so therefore, this your OB here is invalid. This is your high. This is your low. So this is your trading range. That's why price went to the extreme OB of your trading range and tap into it and drop. The same thing here. This is your low. This is your high. Price tapped into the extreme OB and went higher. Simple. Please watch this video over and over. Then you will understand what we're trying to say here. Now, let me take you to the live chart and show you one or two examples. Now, take a look at this. Let's first of all mark up the charts. Take a look. Now, this is your high. Why is that a valid high? It took out inducement. Let me zoom in for you to see properly. It took out inducement. And where is the inducement in the market here? Inducement is needed for your high or low to be confirmed. Inducement is here. All right? That's your inducement in the market. Simple. Just a minute. So that's your inducement in the market. Okay, let me label it as our inducement. So that's our inducement for this high to be confirmed. So this is a valid high, confirmed. Okay, and now this low cannot be confirmed just yet until price takes out this very major structure high and close above it. All right, and so it has to close above it. Okay, it has to close above it, and as you can see, it closed above it. So that becomes your break of structure. Simple. That's your BOS. As simple. Once BOS is confirmed, your low is confirmed. All right, your low is confirmed. So this low is now confirmed. So that's your low. And then price printed a new high. This new high needs inducement. And where is your inducement in the market, guys? Well, look at this. This becomes your inducement. Simple. Okay? So this becomes your inducement in the market. Can you see that? To confirm this high. So your high confirmed. Simple. That's your high. And this low cannot be confirmed just yet until price closes above this high. This high. Important for price to close above. And as you can see, it closed above initially with a candle wick, but eventually with a candle closure. Simple. So that becomes your boss in the market. All right? And then once that boss happens, then your low is confirmed. This your low is confirmed. All right? So now we have a new high, but this new high needs inducement. And so where is the inducement in the market? Look at it, guys. There is no inducement on this leg except here. So this now becomes your inducement in the market. Simple. So this high, this low is no more valid here. It is your inducement. This one is also not valid here. Is not valid here. Why? Because this leg has no inducement other than here. So this actually becomes your inducement in the market. Simple. This one is your inducement in the market. Can you see that? It's as simple as that, guys. And now, so your major structural low before this high is still here. So if, look at it, if price takes it out, this uptrend is over. This is your major structural low here. It's still valid here. If price takes it out, this uptrend is over. So we are waiting for price to come and take out this inducement to confirm our high. All right? Until inducement is taken, we cannot confirm this high. So let's see, where is the inducement in the market here? Look at, it has taken it out here. Look at it. It took it out with a candle wick initially, but eventually it closed below it. All right? So confirming this our high as our valid high. Simple. Watch this video over and over, and then you will understand. That's our high in the market. Okay? So now, inducement has been taken, high is confirmed. Now, this is our last major structural low before this higher high. All right? Now, if price takes this one out, this one will become chalk. It will become chalk. So let's see. As you can see, it took it out. It took it out with a candle wick, but eventually it closed below it. So this becomes our change of character in the market. Simple. It becomes our change of character in the market. Simple. So this uptrend is over. We are now in a downtrend. All right? Now, let's continue to track price. And then we have this low. For this low to be confirmed, inducement is needed. And where is the inducement here in the market for this low to be confirmed? Where is the inducement? Well, the inducement needed is where? Here. That's the inducement needed. All right? For this low to be confirmed. But as you can see, it didn't take it out before coming down to create a new low here. For this low to be confirmed, inducement is needed, and our inducement can be transferred to here. All right, and as you can see, it didn't go. So we had another low here. For this low to be confirmed, inducement is needed. And this one, this is our inducement. Please pay attention. This is our inducement. As you can see, it didn't still take it out. All right, now, before price printed this new low here, for this new low to be confirmed, inducement is needed, and therefore our inducement can now be taken to this point, this one. This is our new inducement in the market, guys. And as you can see, price took it out. It took it out. Look at it. It took it out. Look at it. To confirm this low. All right? Now, for the retail trader who doesn't have this knowledge, we will mark here as the low because inducement has been taken. So this is your low in the market, isn't it? Now, and then look at the way inducement was taken out. Candle wick, candle wick, candle wick, candle wick. Everything wicked. It did not close above. Everything wicked. And yet, the retail trader without knowledge will go ahead and mark it. And they will say, this is your lower high. Why? It took out, it sponsored the move back down to come and take out this structure here. All right? And that will be known as break of structure to the retail mindset. So this will be your BOS. That's what they would label it. But remember, how did price take out this inducement? How did he take it out? With a candle closure? No, not with a candle closure. Look at it, guys. This is simple enough. It took it out with this week. This other week took out this week. This other week took out this one. This other one took out this one. This other one took out this one. And this other one took out this one. So there is no closure. It wicked. All right? Once it wicked, it doesn't matter whether it broke structure here to the downside. So price broke structure, but take note of this point. I want you to take note because we are coming back. We will revisit this area. Take note of this point. Okay? Take note, please, of that area. We are coming back there because if price takes this one out to the retail mindset, that is chalk. That will be change of character. All right? That will be change of character. But let's continue to look at price. We'll come back to that. All right? We'll come back to this point. That's why I circle it with that red circle. All right? Now, price printed this low. For this low to be confirmed, inducement is needed. And here is the inducement, but price didn't come back to it. And before you know it, a new low is printed here. For this low to be confirmed, inducement is needed. This one, but price didn't come back to it. Now, this is a new low in the market. For this low to be confirmed as a valid low, inducement is needed. And where is the inducement in the market here, guys? This is the inducement. Look at it. This one. That's your inducement. And as you can see, it took it out. All right? And then from there, price started going higher because price did not break this low. Let me see. Did price break this low? I don't think so. So price didn't break the low. All right? So from there, we started going higher. Now, inducement has been taken here to confirm this low, isn't it? So let's confirm our low here. Simple. I want to show you something. Just watch. That's your low. All right? Why? Because inducement has been taken out. This is your inducement in the market here. All right? Let me even label it for you to see. That's your IDM. IDM was taken out to confirm the low. Simple. All right? So now, after this inducement, where is price started going higher? Remember, this is your last significant lower high before this lower low. So this is your lower high, lower low. So if price takes out this high, it means we call it what? Chalk. All right? If price takes it out, we call it chalk. And as you can see, price took it out. Initially with a candle wick, but it closed above. And therefore, the retail mindset, we call this one chalk, change of character. All right? We'll call it chalk. But is this actually chalk? That's why I circle here. Is this actually chalk? Think about it, guys. Is this a chalk? Is this a change of character? Think about it. Price took out inducement here with wicks it didn't close above this inducement. Like I told you when I was explaining using the diagram, I said, in this kind of scenario, when price comes back up to take out this high, it is not change of character. It is simply that it's using this high, which you as a retail trader with no knowledge marked as higher, lower high, major high. This is not a major high. This high here does not exist because it did not close above this inducement level. So this high is transferred. It is not change of character. The market merely use where you mark as a major high as fresh inducement. Okay? Please take note of this. This is very important. This is not change of character. We are still bearish. We are not bullish. We have not been converted to bullish structure. We are bearish. You may ask, what do I mean? This is a clear lower high before this lower low. No, this is not a lower high. If you go a step upward in your time frame, this is 15M. Let's get to the 1H and see whether where we marked is actually change of character. Let's see. I circle where I marked. Where is that circle? Let's find the circle first of all. Where is it? Okay, so this is the circle. Look at it here. This is the circle. This is 1H time frame. Look at it. Look at it. This is where traders are making the mistake. Look at it. Now, let's look at this structure together. Price printed this low, all right? And printed this high. And price came down to print this low. For this low to be confirmed as a valid low, inducement is needed. Where is the inducement? Here. This is the inducement that is needed. But remember, on the 15M, you mark it as change of character. This is inducement for 1 hour. But price didn't go up to take out that inducement. Rather, price printed this new low. For this low to be confirmed as a valid low, inducement is needed. And where is your inducement? Take note, this is not your inducement. Why? This candle, this black candle, this bearish candle, look at the high and low of the candle. They are protected. So everything here is known as inside bars. All right? So this is one straight leg down. So for this low to be confirmed as a valid low, inducement is needed. And where is that inducement? Here. This is the inducement on the 1H, where you marked as change of character on your 15M. It's actually 1H inducement. All right? And that's why when price took it out, even though price closed above, all right, price after closing above mitigated out of something here and continue with the downtrend to come and break this structure low here. Can you see that? Some of you would have thought that this is change of character and you want to enter your market going long from here. Now, before we continue, if you are finding value in this video, please give us your subscription and give us a like. Please give us a thumbs up. We need it. All right? It's completely free. All right? It costs you nothing. Just give us a like. Your like will help the YouTube algorithm to show this video to more people, more traders, and then they will gain the type of knowledge that you are gaining now. All right? And if you haven't subscribed to our channel, please, I will implore you to do so and turn on the notification bell so that anytime we publish a new video, you'll be notified about it. And right now, we are running an Easter promo for our VIP, all right, our mentorship course. Now, if you're interested in learning how to trade the markets and become a professional trader within 60 days, and I mean it 60 days, you can decide to join our VIP community, all right? We are giving 40% off just within this time, all right? And the registration is opening from the 2nd of April through the 8th of April. You can take advantage of that 40% off and become part of our VIP community. All right? Now, if you haven't joined our free Telegram channel, it's a public Telegram channel that you can join. And we post trade setups very frequently. All right, you can become part of our Telegram channel. I will leave the link also in the description so you can join. It's completely free. All right, guys. So let's get back to the video. All right, you want to go long from here. How do you go long from here? If you want to go long from here, you will say, okay, I want to take trade from here. Let's see. If you want to go long from here, price as for you, this is a chalk. All right, price close above. This is a high. It needs inducement for this high to be confirmed. And your inducement is here. All right, and price didn't take it out. Look at where your inducement is. For this high to be confirmed as a valid high, inducement is needed. And here is your inducement, but price didn't take it out. All right? So now we move ahead. Price created a new high. For this new high to be confirmed, inducement is needed. And where is the inducement? Now, some of you will mark here that this is the inducement. So price has taken out inducement, and therefore this high is confirmed, isn't it? According to you, it's confirmed. So inducement is taken out, and what did it tap into? Nothing. Everything is mitigated here. Nothing. And started going back higher. All right? Okay, now, maybe you use single candle order block. This single candle order block that is everywhere now. So it took it out with a candle wick. And then, where is your single candle order block? This will be your single candle OB. All right? And so you enter trade from there to go long. Look at what happened. Price took you out. Look at it. It took you out. Can you see? Took you out. What happened? It is because you didn't understand how to determine your valid inducement in the market. You didn't understand how to determine your valid inducement. Please watch this video over and over. I don't want to make it too long. I promised from the beginning that it was going to be a short video. So I'm going to stop it here. We have multiple examples. This is not cherry picking. There are multiple examples of this type of thing. You go back, do your back testing. All right? Do your back testing and let me know in the comment section what you think about what I've just shared with you now. All right, guys. I see you in our next video.